Hey everybody, Nick Espinoza, your chief security fanatic here, and today we've got to talk about financial apps like Cash App, Venmo, Google Pay, etc., because if you didn't know, and I didn't, this was surprising to me, they're not regulated like banks are. And they're doing this basically the same work as like a payment card from a bank. Now, this is coming from Stefania Palma of the Financial Times, and here's what's going on. The Consumer Financial Protection Bureau is basically seeking new powers to oversee technology companies that offer digital wallets and payment applications. Now, this is a move that would intensify scrutiny over companies like Google and Apple, who have two of the biggest platforms out there. I'm sure their lobbyists are working overtime now as they're not a fan. Now, this proposal was issued on Tuesday, and it would subject non-bank companies that offer digital payments to a regulatory scheme similar to that for banks or credit unions. Now, it aims to ensure that U.S. consumer protection laws are applied to basically the growing sector used by millions of consumers to transfer funds and make retail payment transactions. Now, the new rule would subject the industry's largest players, in other words, those that facilitate more than 5 million consumer transactions a year, to regular supervision by the agency's examiners, according to a CFPB official. The regulator estimated this would capture about 17 companies, accounting for 88% of the entire market share. It would also apply to peer-to-peer platforms such as Venmo and Cash App, as well as cryptocurrency wallets, which I'm sure the crypto community is going to be real big fans of. Now, the proposal underlies a major shift in how banking services are provided in the United States. More and more consumers are essentially linking their bank accounts to digital wallets from companies like Apple, Google, etc. And to quote Rohit Chopra, the CFPB director, in a statement, payment systems are critical infrastructure for our economy. These activities used to be conducted almost exclusively by supervised banks. Today's rule would crack down on one avenue for regulatory arbitrage by ensuring large technology firms and other non-bank payment companies are subjected to appropriate oversight. Now, the CFPB can already bring enforcement actions against big tech and non-bank companies over consumer financial issues, but the agency is now proposing to allow its examiners to scrutinize those businesses more closely. The proposal would also be subject to public comments before final implementation, which is a standard government issuance for rules. We're seeing that right now with the CMMC and the Department of Defense, soon to be issuing that comment period. Now, the CFPB said that having large non-bank companies, quote, play by the same rules as banks and credit unions, end quote, would help, and I quote again, promote fair competition, end quote, between depository and non-depository institutions, an important theme for Chopra, who advocated for tougher antitrust policies in his former role as the U.S. Federal Trade Commission, or rather, he was at the U.S. He wasn't the U.S. Federal Trade Commission, he was there. Now, according to the agency, digital apps, basically their share of e-commerce payments has grown to match, and in some cases surpass, the traditional payment tools such as credit and debit cards. And so there you go. If you are using the Venmos, Cash Apps, etc. of the world, one, I thought those had the same oversight because they're literally hooking into your bank accounts, transferring money in the same way if I'm handing out a debit card, for example, or a credit card. And so that is news and just surprise to me. Now, I know there are those apps that have basically been generated by the banks and proposed by the banks like Zelle, but I don't know if that falls under this as well, just given that Zelle is essentially offered by banking institutions directly. Like all my bank, my credit union, they both offer Zelle directly in the app to transfer and move money, so I don't have to go to a Venmo. And for the record, I've never used Venmo. I never thought I wanted a social media aspect into money that I'm sending, and apparently there are a couple of congressmen too that probably regret that as well. But here we are. So I just want to say I'm glad that something like this is coming out. I don't know the nuts and bolts of this, but those things, especially when it comes to financial transactions where a lot of theft, malfeasance, etc., are there outside of consumer protections, I think it'd be a good thing to do this, and again, even that playing field. So there you go. I'd love to hear your thoughts on this. Please feel free to tell me why I'm wrong and give me your logic. But that is your news of the day. And please like, share, follow me here on Facebook and Twitter at NickAESP, and please feel free to subscribe to me at YouTube as well. And as always, stay safe, stay online, and please attempt to stay private. Thanks, everybody.